G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers. Chris is still over in Liverpool in the UK and no doubt delighted with Liverpool's last minute winner this week at Newcastle. So instead of Chris this week, the boss man is back on the show, Owen Rask. Owen, good to see you. Where are you in the world today?
I'm in Sydney, Pete, so recording from a hotel room. It's before work hours, so to speak, here, and I think it's after work hours for you in the UK, so glad to be here.
It's amazing, isn't it? We're all on different time zones and jetting around the world. One of the outcomes of the pandemic, I think, to a certain extent, that people work more fluidly and remotely. Certainly, it's worked out that way for me. I've actually been down in the Cotswolds this week in the UK. You might recall I mentioned it last week, but a bit of an internet black hole down there because I was at a festival. So I had 4 or 5 days with no phone and no internet, which was pretty nice. And then, I sort of resurfaced to find out there's big changes afoot in the housing market. And from a business perspective, we're just busy as buyers agents, very competitive market out there, lots of bidding. And even people who aren't clients just keep sending me messages about properties they went to see and they were expecting them to sell for 1.7, they were selling for 2.7 or whatever the case may be. So, there's a bit of that going on. And I think sometimes people are sort of underestimate where the prices might end up. But I think even as experienced buyers agents, we've had a couple of example properties this week where we've made an offer and we've been outbid, and it just gets to a point where you think, well, there's no value here in this deal and we have to move on. So there's definitely a bit of that happening already. Very low stock levels. How's business with you guys?
It's pretty busy. So from the financial advice side, we've got 2 businesses at Rask. We've got basically the financial advice and then everything else. And the financial advice side, we basically stopped taking on new leads and new clients for a few weeks because we were just inundated. So that's a good problem to have, but now it's all banked up for the next few weeks. It's kind of like you have low housing stock, we have limited number of team members, and so it's just managing supply and demand. And as you know, in a service-based business, everything's on the margin, right? So you're just trying to balance that and not overcapitalize. So that's what it's probably been most consuming for me. But I'm in Sydney this week. We do a lot of recordings in Sydney. A lot of funds management is here. So I would characterize Australia as the split of where the investment world is most of the active funds management. So the stock picking, the different types of things are based here in Sydney, and a lot of the industry funds and the big kind of pension funds are based in Melbourne. There's some index providers and stuff down there too. So that's kind of the lay of the land. So Pete, I get up here probably, if not every month, at least every 6 weeks, I would say. And we jam them in. We've got so many meetings when we're here, hit the ground. And business or pleasure, it's lovely being here. But when you got a young one at home, I think it's a little bit harder than normal. So I'm looking forward to get back home.
Yeah, I've had the same actually. I had a period staying at my mum's point in Sydney, which was wonderful, but being away from the kids is harder as well. It's a different dynamic being a parent. I think one of the things you notice with Sydney, as you said, with all of the high net worths and the wealth there's just so much sort of latent wealth in Sydney, particularly in some of those more affluent areas. And we see this in the housing market all the time. It's things tick along for a while, but then when people decide to deploy equity, suddenly things go completely crazy. And maybe we've got some of that to come ahead, as we'll talk about shortly. And I think, just that dynamic of supply not keeping up with demand, that's just really been a feature of not just the Australian economy, I think the global economy. Since the pandemic, I think a lot of countries experienced labour shortages, shortages of housing, rental supply, and it's taken quite a long time for things to come back into balance. And in the housing market, things still haven't really. I think we've seen more auctions in recent weeks, probably the highest volume of auctions since June, but just the actual level of stock on the market is very, very low. And just the housing supply isn't keeping pace with the demand from immigration. And there's sort of various news articles this week. There's one in the ABC about NDIS homes sitting empty. Sometimes we're not really building the types of properties that people need, which is one of the other stories we'll talk about this week. And one other thing that caught my eye, the Reserve Bank's office renovation, now 1.2 billion, one of the most expensive office renos on record, I think. But again, that just speaks to the cost of living, the cost of construction, cost of development. I mean, they're by no means the only group who've had issues with cost overruns. I'm going through a bit of that myself at the moment on a renovation. So luckily, no asbestos in our case. But I think those are just some of the dynamics that we're seeing, not just in the housing market, but in the economy more broadly.
Yeah. And these, if it wasn't, if the supply-demand imbalance wasn't enough, one of the stories, which really just kind of, I don't know if it got my blood boiling, but it was just really interesting this week. So, the Labor government's latest scheme is pouring fuel on a fire. So I'm really keen to get into this story and just hear your perspective on it, Pete. I know following Cameron on X and Twitter and just seeing everyone respond to this, like economists respond to this, it's really... Yeah, it's an interesting one. So what's the first story of this week?
Yeah, so if you're not familiar, this is our weekly 2 cent segment where every Sunday at 7 a.m. you'll find on your podcast player. We go through the big 3 property news stories of the week. But stick around to the end, though, because we also do your listener Q&A, and we'll have time for some of those as well at the end. So big 3 property news stories of the week. Well, the first one, as Owen already alluded to, so you may recall, actually, Chris talked about this on the podcast some months ago, and he said that it's not really been on the radar for the media, but from 1 January, you'll be able to buy your first home with a 5% deposit. The government is effectively guaranteeing the remainder of the deposit, no lender's mortgage insurance, but nobody was really talking about it that much because it was kind of next year and, something to be talked about later. Well, as it turned out this week, quite surprisingly, the Australian Labor Party announced from 1 October, you'll be able to buy your first home with a 5% deposit. You won't have to pay a single dollar in lender's mortgage insurance. So they basically brought forward this scheme. Now, if you look at the bits and pieces that go with the home guarantee scheme, so all Australian first home buyers who've got a 5% deposit can apply. So there's no caps on income. So you could be a first home buyer and earning a very high income. That doesn't matter in this case. But actually there were previously property price caps in place, but these have now been increased. So if you look at Sydney, the property price cap has been lifted quite significantly. So currently it's 900,000. Well, that's going to be 1.5 million from 1 October. Interesting, actually, that Melbourne has a much lower cap, only 950k, which is surprisingly actually lower than the cap for Brisbane, which is $1 million. And there's various, we can link actually in the show notes to the various price caps around the capital cities and the regional centres, but they've basically all been lifted. And I think, yes, as you say, I mean, this sort of stuff always gets people's blood turning or curdling. Interesting to read the comments of Martin F. Demosky, who was actually formerly with the RBA and these days is a mortgage broker, but he was an ex-RBA economist and real estate expert in the Aussie housing market. And his view, I'll quote from what he said on LinkedIn, actually. He said, "I can tell you from experience that purchasers despise LMI, but they're perfectly comfortable paying a higher rate if it means more borrowing capacity. Is it economically rational? No, but it's how people feel, and they aren't going to change anytime soon." So what he's basically saying, in his opinion, the LMI subsidy for first home buyers is going to set the property market on fire in Sydney for properties between 800,000 and 1.5 million. So, yeah, I mean, I guess that does seem to be the way these things go, is that when the government gives out effectively incentives or free money, sometimes takes a bit of time to get going, but they invariably do get taken up. We've seen this with during the pandemic with the sort of construction grants and so on. people thought there would be a fizzer, and then suddenly we got a huge boom in housing. And I think it will be the same this time around. I think on the more positive side, it will get construction moving too. It might take a couple of years to see the impacts of that, but we will get more homes being built. I suppose just one other point for consideration, Owen, before I flick back to you. Bond markets and index swap pricing, well, they weren't much moved. They're still seeing the terminal rate at around 3% for this cycle for the cash rate target. But I just wonder, I've seen a lot of data getting improving in recent times in the economy. And I just wonder whether we might not need any more rate cuts in this cycle. This is just, as you said, pouring sort of more fuel onto a housing market that's already pretty punchy. And maybe the RBA can sit pat for a while, and it may be that we don't need much more monetary easing at all. What do you think?
That's actually the number one thing that we spoke about at our quarterly investment committee, Pete, is do we need more interest rate cuts when a lot of things are going in the right direction? Like, I know the data is a little bit patchy, but like even if you look at like household savings, that's ticked up recently pretty well. And so we're seeing data from households show some resilience. And at the same time, that's probably, it's not necessarily the reason, but I think that when we see initiatives like this, the RBA is going to have to sit back and think, well, yes, we don't regulate, we're not here to support property prices, but it's the most obvious derivative of the kind of the feeling of wealth in the country. So when there's initiatives brought into place, like we were just talking off air, you and I, about different property investments that, we might have. And this is potentially at least a sentiment shifter in terms of what wealth could be created and what will be underpinned. Like one of the things that basically Martin was saying in here is that it's effectively underpinning this kind of market, not just in Sydney, but around the country. And there's some pretty meaty numbers for people in Perth and Adelaide and all around the country too. But I think it was Dr. Cameron Murray, I think it was on X, I read this morning, that it's effectively just the government saying, we're not going to let prices fall below this range again. Like we've just continually increased that range. And so it's just like almost like a new normal for people. And it's just, it's a security blanket on the property market, in my opinion, and for better or for worse. And I think that is going to have a shift in sentiment. It's already shifting, I would say, in investor sentiment. Like you speak to people, they're doing refinances, they're cashing out, if they're not investing in more property, they're debt recycling. Like that's more popular than ever. The last 6 months in the history of running Rask, I've never seen that conversation more popular. So the ability to use leverage to buy other assets as well is real. And to be honest, Pete, that's actually one of the things I want to talk to you about is the numbers in this 5% deposit scheme were kind of perplexing to me. And the reason is not necessarily as obvious up front. I think that what I've witnessed just from speaking with people and just in our community is that a lot of people in Sydney have built the significant property wealth. As you alluded to earlier, it's kind of like latent, even at the lower end. But people in Sydney know that Australia is bigger than just Sydney, right? So what they tend to do, in my opinion, is once they have these big equity reserves built up, is they don't just look at the Sydney property market. They also cast their eye to Melbourne, Perth, Brisbane, and you have this massive flow-on effect. And I see that in this policy in particular, as kind of a really bizarre move, because if you effectively say to people, well, you can have up to $1.5 million with very little deposit, no restrictions on incomes or all those other things, you can get that property. And let's be honest, your property's probably going to go up in price because it's scarce assets here in Sydney. Then in 2 or 3 years' time, because you've got a bigger leveraged base, you'll probably use that equity to go and buy houses in another state where those people are disadvantaged by not having access to the same scope of lending. So in effect, you've created inequality in the system across the country. And I see that as a real problem. And I know there's like handbrakes for people that aren't living in, like investing interstate and those types of things, but I see that as a problem in 2 or 3 years. And obviously this is a wonderful move for the Labor government because it's a problem that will rear its ugly head in a few years, maybe into the next term of government. So I don't know, that's my kind of cynical take, Pete. I'm curious what you think.
Yeah, I think that's true. I mean, even in my own experience, I think the first few properties I bought in Australia were all in Sydney, I think. But then later on, as you got some equity, get a bit older, then you start looking further afield. Maybe Southeast Queensland is a popular move for people, or is a popular place to invest. So definitely on that front, I think there will still be some sort of serviceability constraints on first home buyers, despite the fact I think most people who really put their minds to it will be able to save a 5% deposit, or maybe even get some assistance from parents or grandparents. But you still got the borrowing constraint of actually getting the bank to lend you the rest of the money. So yeah, I think I suppose if you're looking for sort of early indicators of how this might go, well, the Housing Australia website sort of which we'll link to in the show notes. So you can look through the terms and conditions, the property price caps for the capital cities and the regional centres. Well, that website actually crashed on Monday morning as everyone piled onto the website to work out what are the details of the policy, when does it kick in? I mean, like maybe it's nothing, but that to me says there's a lot of people thinking, right, I really need to, if I'm going to take this up. And I think there was an article, I could be wrong here, I think it was on ABC News Business that said, look, maybe only the first people to use the low deposit guarantee will be the ones to benefit, because people who are going to wait 6 or 12 months will be paying more, and it won't actually impact them or help them that much. From the government's own estimations, the policy will slash the time needed to save a deposit by up to 6 years on a 600k property. So it's basically a big pull forward of demand. As you said, I think it could create some problems down the track, because we will get a supply response when prices go up, assuming they do. That will probably, as interest rates come down, we'll get a lot of new apartments being built, and then I think people who haven't bought well could get into a bit of trouble. And I think at the more skeptical end of the scale, a lot of people are saying, well, it's got a bit of a whiff of subprime to it, getting people to desperately get into the housing market and not miss out, even though they might only have a 5% deposit. But this is why we have market cycles. I think people actually start fearing that if they don't buy now, then they'll be paying more in 6 months or 12 months, and it becomes that self-fulfilling upward spiral. But those cycles don't go on forever, and at some point we will get that supply response coming through. So yes, I don't generally borrowing standards are pretty tight and conservative in Australia now, certainly compared to pre-2007. But yeah, there could still be some issues down the track. At the moment, Labor are polling, well, they're miles ahead, frankly. So it may well be we've got 6 more years of Labor, and they do have to pick up the pieces in a few years. But anyway, that's a debate for down the track. But I think in the meantime, it will be interesting to see when Chris is back on deck, whether they're getting a lot of inquiry from first-time buyers as to whether they can. Yeah, I mean, 1 October is coming around very soon. So that's when the scheme kicks into gear. So if you're thinking of taking it up, you want to be sort of speaking to your mortgage brokers kind of now, because it takes time to go through the requirements and the paperwork and the admin side of things. So yeah, interesting one. Certainly lit up the switchboards a bit on social media, although I didn't actually see it on Monday because I was still in a tent in the Cotswolds. But when I logged back on, I could see the usual tweet storms on socials. So pretty interesting stuff.
It was indeed. Yeah. Just a quick one for you, just to follow up there. You mentioned that eventually you have cycles and supply and demand and these types of things. If we just take Sydney as an example, with, effectively limited land around the CBD and suburbs, because you've got, national parks on one end and you've got the beach on the other side. Do those usual rules of economic supply, do we get supply in, even in 5 years? Does it ever, I guess my question is, for the foreseeable future, Pete, does supply ever come into play in Sydney such that you would actually doubt property prices continue to go up?
Oh yes, for sure. But it'll be driven by high-rise apartments. I think if you look at Sydney, there's not really much land available unless you go out to Campbelltown or out near Western Sydney Airport or something like that. But close to the city, pretty much everything that can be built on is built on, but it's not a very dense city. Sydney feels dense when you're in King's Cross or on the lower North Shore, but you don't actually have to go very far away from the CBD. And actually, we've got a lot of sort of low density housing. You only really notice it when you get on a plane out of Sydney. And yes, there are some little pockets like Parramatta, for example, where you've got some sort of pockets of density, but actually across citywide, it's not dense at all. So there's lots of potential for medium density housing, but particularly high rise. That's what we saw in the previous cycle. Maybe the last cycle was a bit more extreme because we had investors from mainland China. They've by and large been sort of taxed out of the market now with stamp duty surcharges. So maybe the cycle won't be as amplified this time, but certainly in places like Blacktown, Parramatta, Sydney CBD, there's lots of areas where you can build up, and you can build up to maybe 300 meters. You can get some real massive towers. So I think it might take a few years, but we will have a point there where vacancy rates go up again. Certain parts of the inner west as well get a lot of supply. So, and it's more noticeable in Brisbane because it's a relatively low share of the housing stock that's apartments. So when you get a construction boom, suddenly you've got a big oversupply of apartments. So and Melbourne too. I mean, you definitely saw it in Melbourne over 2016, 2017, all around the city. Lots of areas really, South Bank and Docklands and all of those areas, apartments everywhere. So it might take a few years for that to come on stream though.
Okay, that's good. It's promising, like that the laws of economics may apply in Sydney is after all. It's really good.
But not so much for waterfront housing and in Point Piper. There's no supply being delivered there. Or in particular, if you look at the LGAs, Manly or Wallara, the net increase in the housing supply in those LGAs is near to zero. It makes no difference. So yes, it may be that it's other areas where you get the supply, but it will come in time. So let's look at this second news story, which is pretty interesting. The ABS shifts the debate on immigration. I think, this was quite a sort of interesting story because anyone who reads my daily blog will know every month the ABS releases overseas arrivals and departures figures, including for monthly net permanent and long-term immigration. But really those figures are based on border crossings. They're not strictly speaking going to be an accurate representation of net overseas migration. But the reason we tend to use them is that they're as close to real time as we're going to get. So maybe just a month or so lagged. Whereas the official figures on immigration, the latest release was way back in 2024. So it's basically old news and not very relevant. The ABS put out a media release this week saying that these figures shouldn't be used to estimate immigration. And some emails were actually, some quite admonishing emails were sent out to groups like Macro Business and also to the Daily Mail Australia, basically people who are hawkish on immigration, saying these stats that you're sort of posting are somewhat misleading and you shouldn't do it, and please sort of amend your reporting accordingly. So I think the reason this is interesting to me anyway is that although those figures on border crossings are not exactly an accurate measure of immigration, but on a net basis, after when people come and go month on month, historically they've been a very good indicator of where immigration is heading, at least the direction of immigration. And the reason for the crackdown, I'm sure, is because the numbers are going up. Past 6 months, it looks like immigration has accelerated again. And I think this is only a best guess, but I'm guessing that the Labour Party or Treasury or somebody from government has basically said to the ABS, look, we don't like the narrative here about immigration getting out of hand, and should tell people to stop it, basically. I guess we won't find out the exact figures for some time. I think the next quarterly release is in September. But just purely anecdotally, what we're seeing on the ground has all the hallmarks of a re-acceleration in net immigration. We're seeing all of our clients who rent out properties are renting them bang on day one, and in a lot of cases with multiple offers. We're seeing open homes for rentals. There was one in Perth recently with 92 people at the open home, but we're seeing a lot of that in Brisbane as well. So, that's generally an indication that something has changed in the market fundamentals. So, we've seen SQM's asking rent figures have re-accelerated. In fact, actual rents have also re-accelerated, as reported by Cotality and others. So there's a lot of things that are suggesting that actually, yes, immigration has picked up again. The government's not really that keen on this narrative because of the housing shortage, and they're trying to clamp down on people reporting on it. So yeah, it was pretty interesting. I guess over the course of time, we'll get the official figures, and then eventually we'll get the census data as well, and that will tell us the real story. But in the meantime, it seems that the government's not really that keen on this being discussed too much.
Yeah, because it was such an intense political debate in the lead up to the last election, right? And at the time, the justification seemed to be that, yeah, well, of course, immigration is going to be high after COVID. There was a bank up of people that couldn't get into the country during that time, and so on and so forth. But to see it continue is quite, I guess, maybe not scary, but it's just something that people should be mindful of. And in particular, I mean, the ABS to go a few steps further, I don't think I've ever seen that, Pete. Like, I was just, as you were saying this, I was actually just reading the emails to Macro Business, because Lease from Macro Business has published the ABS's emails to him saying that he had misled readers. I feel like that's a little bit concerning.
It's a massive double standard. I'll tell you why, because I mean, I've been writing on the Aussie economy since 2011, and for as long as I can remember, people have always used these stats because they are pretty useful leading indicator for what's going to happen to immigration. You can even see, I've got on my blog an overlay chart of the two data series. They're pretty tightly correlated, and nobody ever cared when people used these figures before, when immigration was lower or coming down. But it's only now it's become an issue, and it just reeks of political capture. I mean, some years back, I actually wrote, I was involved in the writing of a report on property tax reform. It was talking about the impacts of negative gearing reform. And when it was released to the media, within seconds, we had the Labour Party were on the phone to the media, so it's trying to sort of control the narrative. And it feels like it's more of the same. Of course, I've got no actual evidence of that. But I mean, what's clearly the case is that nobody cared about these figures being used for the past decade. And in fact, ironically, the ABS has previously sort of said, well, these are, sort of indicators of immigration. In fact, the government's own Centre for Population said exactly that. It said these sort of monthly figures are an early leading indicator for immigration stats. And now suddenly it's become an issue. I suppose as it relates to the housing market, well, yeah, I guess what we're seeing, well, there's two things. One is there's a lot of demand out there. Whatever the monthly figures show on immigration, we could just see it in real time. The second thing is, though, we were talking before about monetary policy. I think the one thing which would see us get lower interest rates is if the unemployment rate starts trending higher, as it has in New Zealand, as it has in Canada, as it has in the United Kingdom and various other parts of the world. At the moment, we've got pretty low unemployment in Australia. The inflation gauge is, broadly speaking, back in the target range. But if we've got big immigration and jobs growth isn't keeping pace, well, we might actually see lower interest rates in that scenario, because if the unemployment rate starts to creep higher towards 5%, well, that's sort of less optimal, and maybe the Reserve Bank will need to sort of deliver a bit more support. But yeah, pretty interesting again, because I mean, I was a bit taken aback really by the wording, because it was pretty accusatory stuff, and seems a little bit of a double standard, because nobody's ever sort of critiqued the use of stats before in that way. So just as an aside, in the UK over the past, it was really since the Blair government in 1997, we went from being a pretty low immigration country to suddenly sort of huge immigration. And over the past 25 years, the UK has had very large immigration flows, historically speaking. And yeah, there's been a lot of sort of people trying to clamp down on the debate. Anyone who sort of argues for lower immigration is instantly dismissed as far right, or somebody to be deplatformed. And I think it's I mean, look, in the short term, it definitely works. You can sort of control the narrative, but it doesn't work in the long term if you clamp down on free speech, because eventually things just explode back into the limelight again. So I think obviously it's a touchy issue at the moment because we've got record low rental vacancy rates, but I just don't think that clamping down on people's opinion or reporting is the way to go. I think in a democratic society, robust debate is actually what makes the society more resilient. I think just trying to shut it down when it doesn't fit the narrative is not the way to go. And I'm a pro-immigration person, but I just think it's the thin end of the wedge once you start saying, well, you can't say this and you can't discuss that. Well, it's easy to say when it's not your side being shut down, but, one day they'll come for you too. So, yeah.
Absolutely, mate. Yeah, I hear you. And it's a shame. It's a real shame, and it shouldn't happen. I mean, if there's factual errors in things, sure, we could correct each other. But if it's not, then the data clearly suggests that there's some very long-term correlation. Like if you just overlay those two things.
Yeah, I mean, it's never going to be exactly right. But then the thing is that the population stats aren't exactly right. The ABS's own figures are estimated resident population. We don't really know, very exactly how many people are in the country. In fact, in 2017, the population clock was revised lower by, I think, 300,000 from memory, because, we have censuses every 5 years and then sort of more information comes to light. But even then, there's been census years when I've been overseas, other years when I've been in Australia. It's a very fluid, we tend to get fixated on very exact numbers with population. But of course, there's people coming and going all the time. And, this stated residency doesn't always align to what actually happens. Plus, we've got 2.5 million temporary visa holders who are coming and going, students and backpackers and working holiday makers and so on. So, I think it's definitely a sort of an ongoing issue because it does seem that all the data suggests that the rental markets are tightening again. Despite what we thought, which was that population growth might just slow down. So it'd be very interesting to see what happens to the immigration stats over the next 12 months, because if they go down, there'll be people will be saying, I told you so. And if they go up, then people on the other side will too. So
yeah, of course they will.
Yeah. Okay, we've got time for just one more story before we do listener Q&A. This one's pretty interesting analytical piece from Cotality. The great mismatch in housing stock. They reported that 61% of households today are made up of just one or two people. But of course, most of the housing stock, just as we were talking about earlier on, is pretty low density. It's 3 and 4 bedroom houses. I think when you look at some of the demographic shifts in recent years, and we've got lots of international students in the country, but people are generally having smaller families and we're having them later. So we're generally getting married later. We're having fewer kids. People are living longer. So quite often they end up on their own later on, or maybe just as a couple. But there's many more divorces than we used to have. So there's lots of separations going on. I think some people actually end up, I know that some people end up owning 2 properties. They have a place that they might live on the Sunshine Coast, but they might have a crash pad in the city. So that, again, is sort of it's a household that for some of the time anyway might just be one person. And I think it's as Cotality showed at the macro level, it just seems that even though most of the households in Australia are actually just 1 or 2 people, but most of what gets built is generally detached homes for families, which are 3 or 4 bedroom homes. And there's kind of an odd sort of mismatch between what people actually want and need and the types of homes that are getting built. Yes, when we go through the housing cycle, there will be a period where we get a lot of high-rise apartments, but I'm not always sure that those are popular. I think tenants like those, but home buyers less so. I mean, it's always a sort of an ongoing challenge. It's not going to be an exact science, but I suppose it seems that what we get in Australia is sort of big houses that are being built miles from the city and a lot of very small apartments that get built up into the sky. And there's not really much in between that sort of medium density, 3 bedroom townhomes or smaller housing. We just don't seem to get that missing middle, never seems to quite arrive.
We see, I'm seeing a lot more people take advantage of the downsizer scheme than before. So for folks that aren't familiar, that's where you can effectively sell a house that you've lived in for 10 years or more and you have to be over, I believe, the age is 55 off the top of my head. And so it's to try and encourage that cycling out of those bigger homes into more, modest homes, I guess. And you can use some of the proceeds to put money in super. So it's a pretty obvious financial planning strategy, and it makes a lot of sense for a lot of people. But maybe there's some way of doing that is kind of easing the congestion or having some kind of gate that allows people to move in whatever way. I don't know how this policy would be implemented, but some way of moving people out of those into that next level down, so to speak, where you can use it in air quotes a different form of downsizer scheme to release that property for people that have those bigger families. And then, potentially, because I find that rule that the downsizer scheme is somewhat limited in that, you have to be 55 for that to be in place, which seems reasonable, at first glance, but then you have to have lived there for 10 years. Well, does that make sense too? Like, should we be cycling through housing stock more often? Maybe that's one of the things. And if there's an incentive, then you'll get construction companies, they'll be more likely to build those 2 or 3 bedroom townhouses, in that urban fringe. So maybe that's an opportunity to release some of that pressure over time. But like you said, data's a bit patchy, and we'll just have to wait and see, I guess, if anything like that comes to fruition. But Pete, we do have a couple of questions this week. I am very naive on the second one, so I would like to ask that question to you. But if you're comfortable, I would like to ask you these questions, and then I'll just make some animal noises or something somewhat intelligent as you go through. But the first question came from Alex the Third, and the question can be boiled down to a very simple one, which is, should I buy one $1.4 million investment property or 2 $700,000 properties? I imagine this is a question that you get a lot.
We do, yeah. I mean, I think there's pros and cons to either. I think for somebody who's a higher income earner, they would probably focus on just trying to get one outstanding investment property, particularly if they already have a home and they're thinking, well, I'd like to get a really good investment property, which is, to your previous point, it's probably a house that's close to the city, close to amenities, good walkability, family friendly or family appropriate. And, that tends to be a very scarce commodity in Australian property. We don't build enough of them. The new housing tends to be miles out from the city, or we get high-rise apartments. I suppose the downside to doing that, one is you don't get much diversification. You are just buying one, it's a very lumpy investment asset class in that respect. So you sort of, if you're going down that route, you have to buy well, and there's a lot of pressure on that one asset to deliver the goods. The other thing is that generally the higher up the price points you go, at least in residential property, the rental yields tend to fall away a bit. So you could have some negative carry on that. Let's say you're borrowing $1 million. Well, if you're borrowing $1 million at 6% and the rental yield's 4%, you're probably going to have some holding costs basically. So, and it's a bit different in commercial because sometimes the further up the price points you go, there's a bit less competition and you can actually get better rental yields in some cases. But for residential, it's very often the case that the cheaper property has higher rental yields, but it tends to, not always, but it tends to sort of fall away. So those are the sort of disadvantages. The advantage of buying 2 700K properties, well, yes, diversification. Yes, you've got 2 properties that need managing, so it has a bit of extra cost and there's a bit more admin. But at least you're sort of spreading your investments around. The challenge, I think, at the moment is actually getting high quality properties for 700K. It feels kind of crazy to say that. Maybe 6 or 7 years ago, it wouldn't have felt like that. But now, if you want to buy a house, well, where are you going? You're going some way into regional Australia to get a house in that price point. So you may end up at 700K looking at units or townhouses, which almost by definition have less scarcity value. They've got a lower land value component. So I think it largely depends on your income brackets. I think if you're a higher income earner or you're expecting to earn more in the future, you'd probably just buy one excellent property. But if your income's going to be a bit constrained, then maybe just getting a couple of cheaper properties will have lower holding costs and a bit of diversification. But there's no right or wrong answer to that. If it was me, I'd spend 1.4. That would be me.
Yeah.
But people have different
Same.
views, and I'd focus on high capital growth. That's what I would do.
Yeah, same here. Same here. Great question. And for anyone that's listening or watching, you can send any question. There's a link in your podcast player or in the YouTube description that says ask a question, just like the Australian Property Podcast. We love to answer questions. We love to hear from you. And it's bonus points if you give us a funny name or there's a bit of wit or humor in the comment as well. So the next question and final one comes from C, or it's Craig. Hey guys, I'm in my late 50s and been listening to your podcasts and thoroughly enjoy them. Find them entertaining as well. Could you do a future podcast segment on buying into over 50s lifestyle villages and the land lease concept? We'd love to hear if you know somebody who can expand further on the good and bad about these, as they are becoming more popular and even more upmarket than ever before. So I'm pretty naive when it comes to this stuff, Pete. So, obviously the lifestyle villages make sense, but the land lease concept, can you just clear that up for us?
Yeah, for sure. So this is much more popular in other countries, notably in the US, than it is in Australia. But it has become more popular in Australia. And you would have heard Chris talk on previous podcasts about some of the potential disadvantages. I mean, let's start with the advantages. As you said in the question, they're actually becoming much more upmarket now. So you can new land lease estates. They could be really well located. You've got a lot of like-minded people around you. You're getting a new property. Everything's kind of shiny and new and it all works. And from a lifestyle perspective, I imagine that could be fantastic. I think there's two different components to this. One is the lifestyle component, which might be perfect for what you're looking for. I'll just say from a purely financial perspective, though, they're almost invariably a less good investment because you're not really getting ownership equity. You're not an owner of the land. If you think about why real estate has been a good investment over the years, it's generally because we've got a limited amount of well-located land in Australia, quite a bit of scarcity. And it's the old adage that land depreciates and buildings depreciate. So yes, if you could be an owner in a land lease estate, but if you don't own the land, well, yeah, you're not getting the appreciation. You're really just getting the depreciating part. There's also probably, in most cases, there's quite a lot of limited control. So there'll be a lot of restrictions on what you can and can't do. A bit like if you bought a cabin or something on a caravan park, you can't just sort of change the property. There's probably going to be quite a lot of restrictions on changing the property. So, and there are some other costs as well. So you're going to have basically an annual or quarterly service charge or a ground rent to pay, and there's less control on that too. Because if they're increased, there's basically nothing you can do. So, yeah, I suppose the disadvantages are really as and well when you sort of come to exit. Well, you're not going to sort of you're not going to have increased your ownership equity at all. So, from a purely financial point of view, you'd be much better inclined really just to buy a residential property rather than go into a land lease estate. You have to also just read the terms and conditions, because if there's a limited term on the lease, well, what happens to at expiry? Do you have to sort of change the property back to a previous condition or something like that? So that very much depends on the estate in question. So yeah, I would say from a lifestyle perspective, depends on the area, but potentially fantastic. From a financial perspective, though, yeah, you wouldn't do it for the financial reasons. That's my take anyway.
Yeah, no, I really appreciate that, because we don't deal with this as much. Typically, as in the financial advice side, we let our clients kind of dictate where they want to live and let them decide that lifestyle element, and then we work around them. So this is, and typically the type of clients that come to us at pre-retirement or retirement tend to be people that aren't thinking this way, at least at this stage of their life. So really, really appreciate you taking us through that, Pete.
I guess the thing is, when you buy a property, if you want it to be a good investment, you want it to appeal to a broad range of people. The reality is, for a more sort of a niche property type, well, the pool of people who are potentially going to buy from you is naturally going to be much smaller. So, yeah, I think there may be some difficulty selling at the end of the piece. It's possible that the property value is depreciated. And also, even just from a financing perspective, a lot of retirees who are would really be sort of cash rich. But if you're looking to get a mortgage or financing, that's not necessarily going to be quite so easy either, because it's not just standard residential property. So yeah, it's not to say don't do it. I'll just say, if you're thinking just with a financial hat on, I wouldn't do it. Just anecdotally, in our part of the world in the UK, a lot of people, they go on holiday to the coast and they see not land lease estates, but things like caravan parks, and they love the idea of having a cabin. But yeah, the terms and conditions are not always great, and yeah, I've seen a lot of people set money on fire going down that route. So just got to be a little bit smart about how you go about it if you're going to go down this route, because it's not going to be like a magnificent investment or anything like that.
Yeah, that's great. That's great wisdom, mate. So thank you. We've covered a lot of fiery topics today, but if people want to get in touch, you know where to go. You can jump online to the community at community.rask.com.au, or you can find Pete on X/Twitter/ whatever it gets called next. Pete's obviously on X, and alongside a lot of other great property thinkers, economists, these types of people. So absolutely wonderful follow. It's where I get a lot of my property intel other than here, right, Pete? So join Pete on X if you have the chance, as well as dive into all the resources, because there are heaps from this week. If you're a first home buyer, I think get in touch with Chris or the team at Alcove or whoever your mortgage broker is, because right now is the time to act. As Pete said, don't wait for October 1st and then do it. A lot of these things just move the floor of property prices higher, and oftentimes quicker, particularly coming into the spring season and these types of things. So just be on the front foot, everyone. If you know a first home buyer, get in contact. Tell them to get in contact with their mortgage broker now, just to see what applies to them. We'll put plenty of resources in for this episode. But Pete, this is heaps of fun. I think Chris is back next week.
I think he is, yeah. So we'll have to listen to Liverpool being top of the league, no doubt. But it'll be good to have him back on and to get his hot take. I think he might have surfaced on LinkedIn, actually, even on his holidays. He just can't stay away from it. But it'll be interesting to get his take when he gets back on board.
Yeah, absolutely. Well, Pete, this has been absolutely fun. So we'll link in the show notes if you want to get in touch with Pete and the team. Buyers advocacy. He's one of the best, if not the best. So get in contact with the team, and let's get involved in the property cycle, because I think it's a pretty exciting time to be in the market if you're an owner or an investor right now. So thanks for listening to this episode, 2 Cents episode of the Australian Property Podcast. And Pete, absolute pleasure. So thanks for having me on.
Cheers. Thanks, Owen. Thanks, everyone. See you next week.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.